Pete, welcome to Out of the Hourglass. Thank you for being here. How are you today?
I'm good. Thanks, Molly, for the invite. I appreciate it. I'm
Yeah,
happy
you
to be here.
bet.
Yeah.
You have some interesting things to share, and I know our listeners are going to enjoy this. For those that don't have the pleasure of knowing who you are, can you just give us a quick rundown of who you are, what you do, and where you're from?
Yeah, my name is Pete Schnepp. I'm in Phoenix, Arizona, and I am a longtime painting contractor, however, converted to a full-time real estate investor.
Wow. Is it hard? Do you like one versus the other more?
The reason why I converted to being a full-time real estate investor is because I like that better, for
Yeah,
sure.
there you go. You followed your passion as
I
as
did it on I
entrepreneurs
did it
do.
on purpose. Let's
Yes,
just say
yes.
that.
Let's start a little bit at kind of at the beginning because obviously the painting contractor came first. So I just kind of want to set that foundation there. Tell us the journey, from when did the business start? When did Envision begin? And what does it look like today? What are those two parallels?
Envision began as a side thing as I transitioned away from my full-time employment. I was working in construction and I started the painting company on the side. That was back when Craigslist was around. So I threw some
Mm-hmm.
ads up. I started getting work, got my first crew hired, and I was doing it on the side from my other job for a year or two, and it was picking up, and finally it got so busy I had to like shut it down before and then work out a transition. So at this point I've owned Envision for about 20 years, almost 20 years,
Amazing.
maybe like 15 or 16 really full time, or at least like going gung ho with the business. But yeah, it just started off with me hustling, putting some ads on Craigslist and finding crews. And the last few years, we've been hovering between the 2.5 and $3 million range. And
Mhm.
so it's not a huge business by any means, but it's kind of become a lifestyle business. And we've got some big plans to take this to the next level pretty soon that we're doing.
I love it. That's awesome. And tell me about that Inc. 5000 award behind you. We can't go further without mentioning that.
Sure. Yeah, we got that a few years ago for Envision, and it's based on revenue growth. I forget what that was, but we had a really good increase one year, and I figured I'd apply. And sure enough, we were, I don't know, ranked 4,000 something out of 5,000. But
Cool.
it's a
Hey,
nice,
you're
it's a
ranked.
nice accolade to have. Yeah.
Absolutely. Absolutely. Now, when did the investing or the real estate investing come into play? When did that interest first spark for you?
Early on, I mean, really, the interest first sparked when I read the Rich Dad Poor Dad book a long time ago when I was in college, but I just never really had the means to really pursue it. But even in construction, when I was building for large builders, I realized that all the wealthy people that were buying the nicest houses had a lot of real estate in their portfolio. A lot of them were investors or agents or lenders, and there wasn't anybody that didn't have real estate in their portfolio. So I knew that that was the way to go. And over the years, I had my contracting business, but I always just felt trapped. To me, the path to a life of freedom, both financial freedom and time freedom, was always in real estate. And so it just was a matter of how do I get there?
It's interesting. We continue to see, I think, more and more business owners in the trade space diversifying in that direction as well. I mean, there's several folks who we work with. I mean, we had the podcast with Dan Brady. He does the short-term rentals, the Airbnbs. Got a lot of other contractors. We have a real estate peer group, as we've mentioned when we had that with Dan Brady, because we've seen that grow. So clearly, there is a path there that is working. How did you direct towards commercial real estate properties versus, let's say, the route that Dan Brady went with Airbnbs?
Well, I have a couple of Airbnbs and I know Dan Brady really well. I went and
Hmm.
visited him and looked at his properties. He's got a really nice operation and I have a lot of respect for Dan. He's
Yeah.
doing something really cool. It's just a different path. That's the beauty with real estate is there's many different ways that you can get involved and have it benefit your life. Personally, I've got two Airbnbs and I decided I didn't want to buy any more. They are
Hmm.
very tough to manage. Dan's got a great team that helps him do that. And I
Yep.
never built out my team for that. So like I do all the work and Airbnbs is more like a service business. Okay. You're a
Yeah.
slave to the stars, meaning if you don't get 5 stars from every guest, you get wiped off the booking platform or they don't show you. And it is very active and very customer service oriented. And to me, to have my whole portfolio in that one sector is quite risky. So I wouldn't want to
Hmm.
put all my eggs there personally because then you're at the mercy of Airbnb and Vrbo for everything that you've built. And I
Yeah.
didn't want to go down that route. So combined it all, I feel like apartments have the least risk and the highest potential reward when you combine all those factors.
Okay. How do you balance? I mean, you just said you don't have a kind of a big, a team behind you on this side. So how do you balance the work that you do? And we'll get into asset stream properties. So, that business versus Envision. You must have some players in place that are helping you run those companies.
Well, yeah, I've built out a team through Asset Stream. So I definitely have people. It's funny because I really gravitated towards buying real estate because you don't need a bunch of staff.
Yeah.
But here I am building out a whole team. So it's kind of counterproductive. Maybe it's just the natural entrepreneur in me. In terms of the two businesses, they really operate independently, two
Mhm.
separate entities. I don't have any employees that cross. And actually I've tried to have shared like marketing and accounting people, and it never seems to work, honestly. So we keep everything completely separate. But yeah, I use Envision and the crews there for a lot of the projects that we're doing on the real estate side, for sure.
Nice, nice. And obviously you have the mindset of knowing the trades really well and knowing construction. So that's gotta help when you think about, purchasing of properties and you're knowing what to look for. There's definitely some synergies there. Talk to me about asset stream properties, because that obviously new venture, it's separate entity. When did you go from just wanting to own a couple properties to, wanting to have this portfolio, but also being an advisor to others?
Well, it was a long transition, so it started off, my goal was to buy one income property a year. So as I was a contractor and that was my main gig, my whole goal was to make, 50 to 100,000 bucks more than what I needed to live off of and more than my reserve balance, right? And so
Hmm.
if I could take that and put that into one down payment per year, I thought if I could buy over 10 years, 10 properties, I just knew that everything would be all right. And so that was my goal, really just slow and steady. And that's what I did. I did it, once I got the cash ready, I started the hunt, worked nights and weekends, doing all the analysis, the drive-bys, like this whole thing outside of typical working hours, just
Yeah.
just grinding it out. And over the years, so I built up, that was really a slow run. In 2017, I set this big goal for myself. I called it 5 years to freedom. And I
Mhm.
gave myself 5 years to achieve what I called financial freedom and time freedom. And to me, what that looked like was getting to the point where I had 20,000 a month in cash flow from rentals. So aside from my contracting business income, if I could get to that, I would feel like I was financially free and have the ability to, start traveling and doing cool stuff. It's so every day, like I just woke up inspired trying to get there, and I accomplished that mission a year ahead of schedule. And I got
Nice.
there, and once I did, I kind of felt like I had maybe like a safety net. And then things started to really open up. And I had realized at that point, looking at the 80/20 rule, the Pareto principle, and just in the back in terms of what hindsight, what the real estate portfolio has amounted to versus the contracting business and where I wanted to spend my time. Then began, a long transition, really empowering my team, changing up some structure, bringing in some consultants, and slowly but surely taking myself out of the day to day in that business,
Hmm.
empowering my team, and also going into like starting to raise capital and partner with people on different types of real estate entities and joint ventures.
So from one big goal to the next.
Yeah,
Yeah.
yeah, exactly.
What's the goal now? What are you working towards in this moment?
So my goal now is called 10x and 7y, and it's to 10x my life in 7 years from when I started it. And so that's my net worth, it's my income, it's my travel. So a big part of that is I want to visit 50 countries.
Cool.
When I started, I had five in my belt, and so I want to see 50 countries by July 30th, 2030. And then my celebration, if I accomplish my goals, I'm hoping to visit space and deep sea. I'm hoping that'll be a lot more readily available by then.
I love it. You really shoot for the moon with these goals, which is awesome.
That's my BHAG, yeah.
Yeah, yeah. Who holds you accountable to these goals? Is it yourself, or do you have someone who that keeps you motivated?
Yeah, it's mostly me, but I do have a lot of mentors and coaches in my life in different capacities. However, I don't have one that's specifically like focused on this. And I'm actually starting conversations with somebody that I might engage with on a
Cool.
on a much higher level. So we'll see.
That's awesome. I will be very curious to see you hit deep sea and go to space. That's a pretty
Yeah.
cool celebration. And you're right. As the years go on, those those adventures seem to be getting easier and closer to becoming a little bit more attainable, let's say. Let's talk a little bit more about kind of asset streams, because what you have developed and what you're doing, I know will spark interest with a lot of our listeners, especially those who are interested in the real estate space. So commercial is the way that you go. What types of commercial properties do you typically target for your portfolio?
My niche is what I call small multifamily. So 10
Okay.
to 50 units is kind of my niche. However, I'm an opportunist. I've got a portfolio of single family homes. I don't normally target those because it's tough to scale with
Mm-hmm.
those, but I did pick up 3 properties this year that are designated for like behavioral health and supportive housing. And so I've got a couple partners on that, and that's similar to apartments, but it'll be a lot different. And so the multifamily is my niche. However, if I find a right deal and the right operating partner on a different asset class, then I'm open to exploring it. Let's put it that way.
How does one go about finding the right deal or the right people to partner with for these opportunities?
That's the hunt. That's the beauty of it.
That's the
That's what I
fun.
love.
Yeah.
Yeah. I mean, over the years, I've bought a lot of properties over the years. And so I've got agents that send me what they know that I like, off-market stuff. I'm an agent myself, so I can scour the MLS. And I've got wholesalers that send me a lot of stuff. And then we started actually cold calling property owners ourselves as well.
Wow.
So there's not one straight method, but it's just once you get enough deal flow and you start looking through the deals and you've analyzed enough, you can recognize which ones stand out from others. And then, really, you can never go off of the surface anyway. You've got to start swinging the bat and making offers. So
Taking the
it's a whole
risk.
process. It's a whole process. Yeah.
When did you become an agent? And was that a kind of a big change for how you were able to make these deals happen, let's say?
I became an agent back when I was still employed. So this was
Ah,
probably 2007, 8-ish. And I did that really well because I knew that I needed the knowledge. I needed the knowledge of how the transactions work. I knew that it could create some additional income. For a while, I tried to be an agent with the construction business. I had marketing stuff that, hey, I'll paint your house and sell it.
mm-hmm.
And there was mixed responses on that. I did a few that it was really cool, but for the most part, I got a sideways look like, wait a minute, you're my painter and you want to sell my house too, you know?
Yeah, yeah, yeah. Yeah.
Anyway, I quickly realized I don't want to be a realtor for retail sales. That is not something that interests me, but I have all the knowledge, the back end knowledge of the deep depth knowledge on transactional stuff, and I have access to the MLS, so I use it for myself to comp properties. So when I'm looking to buy a property and it's 9 o'clock at night and I'm trying to dig into the comps, like it's all at my fingertips. And so that has been very helpful in what I've built over the years, for sure, for being an
Yeah.
active investor. Yeah.
Yeah. That's really interesting that you've been an agent for long, kind of before that you even really entered this space as in depthly as you have.
Yeah, I actually don't tell many people. It's not on my business card or anything because it's not really the business that I'm looking for.
Yeah.
It's just it helps me be a better investor.
Totally. It's a tool. It's a really good tool in your toolbox for this. When you are considering these deals, let's say, hypothetically, the one you find at 9 o'clock at night, you're looking at pulling up comps. What are you looking for? What stands out to you as important or sparks your interest, let's say?
Yeah, great question. So there's different levels of filters,
Mhm.
right? And so you start with kind of a broader filter. And for me, it's what area is it in? So I'm in Phoenix and I know certain pockets are much better for rentals than others. For example, Scottsdale, super high-end place. You can buy apartments there, but you're just not going to cash flow. It's more of a
Okay.
long-term appreciation play. The areas, which I've come to know over time, I always look for one stories. I like one stories way better than two stories. I prefer A-frame shingle roof over a flat roof, right? And so those are a few things that right off the bat I'm looking for. I look for things that could be good tenant amenities like open space, common areas, and the quick check. Quick check is really like, well, what is the asking price versus what are the rents? And
Okay.
that quick ratio gives me those things right there will kind of let me decide whether or not it's worth digging into.
Are you surprised sometimes by how off or far apart some of those ratios are when you look at the selling price versus what the rental price
I'm
is?
always dumbfounded. Like, how does
Yeah.
anybody supposed to make money on that?
Yeah.
Because
Yeah.
it's never what you want. It never seems good. But no deal is great on the surface, you know, and so if they were willing to sell at that price, it would already be sold. So you've got to do the hard work and negotiate, or you've got to be the first one. So what I found, like this niche that I'm in, I'm buying directly from the property owners, the mom and pops. And so we target people who have owned the property already for 20 years or so. So
Okay.
they've already made their money in it. Most of the time they own it free and clear, and they're really just looking for a convenient transaction. They don't want to list it. They don't want a bunch of people going through all the tenants' units. Most of the time, you know, they're using it for cash flow, so there's a lot of deferred maintenance. So the property owner doesn't want to go to the property because he doesn't want the tenants to come out and say, hey, my window's broken and my shower's leaking and this and that.
Yeah.
But the tenants don't go outside because they don't want to accidentally see the property owner and realize that their rent is going up $200 a month because it's way under rented. So that's kind of what we look for. Those are easy ones to come in, manage a little bit more professionally, find a quick way to increase income or utility bill back, and find a way to add value. So it's all kind of part of the initial filters.
When you mentioned like in Scottsdale, there are properties that are more long-term appreciation versus cash flow. Those are two different approaches someone could take, right? And could you have a mix of both of those in your portfolio? And do you?
You absolutely could. Yeah, so anything higher end, you know, whether it's a single family or a multifamily, generally is not going to provide much of a cash flow,
Okay.
but you're hoping on appreciation. So a lot of coastal markets are like that. California, Florida, you know, it's the same thing. If you buy an investment, it's most likely going to lose money on a month-to-month basis
Hmm.
if you take out traditional bank financing. Now, if you put 75% down and get a 25% loan, maybe that'll switch it for you. But they're expecting a higher rate of appreciation over the next several years in that market, right? And so
Yep.
higher end properties, really you're foregoing cash flow for hopes of higher appreciation, which, you know, when you start playing at a much bigger level and you don't need that cash flow and maybe you can afford the losses,
Mhm.
then there's a reason why people do that. And there's huge tax benefits too. So a high income earner, just the tax benefits alone for a high income earner might make it worth it. And if they can afford the loss or the potential repairs needed or not being a break-even property for several years, but they know that over time it's going to go up in value, it might be something that they want to pursue.
So yeah, it's an avenue, it's a choice. It's you got to understand what you're kind of what you're in this for, what the long-term game plan is, and
Right.
what capital do you have at the moment? Can you afford to do that?
Right.
When you do purchase a property, let's say, a multifamily or, a small apartment complex, and there are those needs for tenant improvements, for more professionally running that property, what's your process there? I mean, that you can't be the same person. You can't be doing all of this, with the deals, but also be the one improving that property. Are you?
Well, I mean, I have people doing all the hard work. I cast
Okay.
the vision and
Okay.
set the plan. That's all done in the upfront, you know, due diligence and acquisition. Like we know what we're going to do. And when
Okay.
we close, it's just a matter of assigning my team to get it done.
I imagine there's times where rent has to go up in certain properties. And do you ever deal with kind of backlash from tenants on that front? Are there challenges to that?
Yeah, it's something that you've got to plan out accordingly.
Yeah.
So we're doing one property right now. It's a 24 unit and it was almost fully occupied, but we're doing that right now. We're improving units, but we're allowing the tenant leases to expire. It's not like we're pushing people out.
Right.
And so once they expire, we basically give them a renewal notice. And if you want to stay at this amount, you can stay. If not, you can move out. And then if they move out, then we'll go ahead and improve the unit. So we're not forcefully moving people out, and you've got to do it with tact. And right now, the market is a little bit softer anyway, so you don't want to get too risky in this market. So it
Hmm.
just depends. When people move out, that's when you do it.
There's a lot of moving parts to it's not you're not just buying a property. You're buying all the things that come with it and the people that come with it too.
Well, it's a business. When you buy commercial real estate,
Yeah.
it's a business that's backed by a hard asset. And that's what I like about it, because if you can increase the profitability of the business, then the value of the business goes up exponentially.
Which that is the goal, right? At the end of the day.
Right. So if you think about the value of real estate versus the value of businesses based on like an EBITDA
Hmm.
trading. So a lot of like painting contractors or any business owner is like, well, the enterprise value of my business is based off the EBITDA. whether it's 2 to 3 times, in the service business, that's probably the average 2 to 3 times your annual EBITDA. If you're in software, maybe it's like, maybe you get a 10 or 20x times, but service businesses are usually 2 to 3. You got some secret sauce or doing something really special, maybe it's 5 times EBITDA. In real estate, when you take that and convert it to a cap rate, or convert a cap rate to the EBITDA, you're looking at 10 to 15 times multiple on real estate. And so if I can buy something at a higher cap rate, or that's not performing well at, say, like a fifth, the equivalent of a 10 to 15 times EBITDA, then we increase the profit by doing utility billing, maybe bumping the rents, maybe improving it, maybe like getting laundry income, whatever it may be. We increase the profitability. And now all of a sudden the cap rate is more valuable and the EBITDA could be 15 to 20 times. And so it's just like buying and selling businesses, but just with some different terminology,
Yeah.
and realistically with less staff and less variables. Like, to me, doing that on a real estate asset is much easier and more fun for me than doing
Mhm.
it for a business.
That's fair. Yeah, it's super interesting. I mean, prior to us recording here, I don't know a whole lot about real estate. I mean, I've purchased and sold personal homes, but when it comes to the commercial space, it's a whole foreign ballgame to me. So to look at it like a business makes a lot of sense. Makes a lot of sense. When did how do you learn? Like, how you have acquired all of this knowledge over the last 10, 20, 30 plus years as you've gotten yourself involved in more of the real estate space. Where do you go to learn these things? Where are you finding valuable information?
I mean, it's everywhere and it's all the time,
Yeah.
honestly. Like, all those years as a contractor, my vehicle was real estate university, just with books, podcasts, stuff like this. That's all I would listen to was real estate
Hmm.
stuff. And I was taking action on my own. So really, that's the best learning, is doing it yourself. And I did it myself for 15 years with my own money,
Yeah.
and I didn't raise any capital or partner with anybody until just a few years ago. So that's the best learning. It starts with the knowledge, but so many people have what's it called? The procrastination just
Hmm.
from learning. There's a phrase I'm looking for right now. So many people spend their life learning and just never stop, or just be too scared to take action. But when you
Yeah.
take action and you actually get into it, that's when the learning really begins. But even now, like, that's all I listen to is podcasts and books about real estate, maybe more now market driven and macroeconomic stuff rather than like the tactical stuff. But it's a focus. It's like
Yeah.
a daily focus of perfecting your craft, right?
And you're also teaching others now. I mean, I think I receive your emails that you send out from asset streams where you're advising on certain topics, or you're kind of capturing interest. So not only are you learning, but you're also now a channel from which other people can learn from, which is pretty cool.
Yeah, yeah, well, sure. You got to let it flow through you.
You
There's a lot of
do.
people that want the knowledge that I've come to get, and so I'm always willing to help.
Do you tell us about you were had I might be saying this wrong, but I remember seeing this kind of come through maybe in the last couple of months on those communications, the deal room.
Oh, sure, yeah.
Talk what is the deal room? Because it sounded pretty exciting. If you're in real estate, it sounded like a cool place you'd want to partake in.
Yeah, well, it's not even just real estate, it's private equity also. But I created something that I wanted to attend. I created an
Okay.
online event that I wanted to attend. And what I realized is, just through all the different groups and networks that I'm in, I know a lot of people that are doing deals and making investments, a lot of cool people. And so the deal room, we're going to do our third episode actually coming up on December 4th. The
Okay.
website to sign up is dealroomonline.com. And so you can sign up just to check it out and be part of the audience. There's a link there. If you've got a deal that you're actively raising capital for, you can apply to be a presenter. I can't guarantee that you will, but that's where it would start. And so it's a room where we have 5 or 6 people with live investment opportunities. They each get a 5-minute pitch, which is really cool. It gets down to the nuts and bolts. And if you're looking to make an investment or find an opportunity, it's a great way to see different types of investments and asset classes. So we don't have like 5 different apartment deals.
Hmm.
It's a curated lineup. We might have an industrial deal. In Pennsylvania, we had that on the last
Oh,
one.
cool.
oil and gas. We've got private equity offerings. I had a guy raising money for a restaurant, another guy doing a pre-IPO deal, and then different real estate investments. So everybody gets 5 minutes to pitch, and you can listen through and make a quick decision whether or not it's something to dig into a little bit more, and then some Q&A afterwards. So like I said, we've only done 2 so far. This will be the 3rd one, and we're making it better each time. And it's turned out to be something cool.
That it's very cool. And I love the fact that it was something that you wanted to partake in, maybe didn't see it existing around you, and so you built it.
Well, there's a lot of people out there like me who are investors, operators. So like I buy my own deals, but I also invest my capital with other people through my IRA.
Okay.
And so like I'm always looking for other people to partner with or even just invest my capital with in different stuff.
Sound like a very, very busy individual.
It's fun. I love it.
Yeah.
I
Yeah.
love it. Yeah.
For those that are listening and are like, oh, this is what I've been wanting to do. I want to get a part of, diversify in that direction or kind of take the risk from the things that I've been learning. What's your advice there?
Well, the advice is really to think about a big picture in terms of what you really want. With real estate, there's 2 routes you can go. You can be active or you can be passive. And for me, real estate and construction is what I know. So this is a very active role. Like I am an active investor, and I almost think like passive cash flow is kind of a myth if you're buying your own deals. And so I'm a big believer of you got to have 2 engines. You got to have an income engine and a wealth building engine. And so even though I'm fully in real estate is my wealth building engine.
Okay.
My contracting business is the income engine. And without your income engine, the wealth building engine can't grow. Right. And so when you go back to somebody wanting to jump into real estate, it's like, well, I always ask, where is your time best spent? And, like where's the biggest value that you bring? And so if that is in your painting business, or if you're a doctor, or if you're, whatever profession, a salesperson, production manager, and that's how you make your income. You've got to keep that coming, right? Now you can buy 1 or 2 properties probably on your own without much work. But the other way that people do is just purely passive, and you invest with other people that are the active partner. And so that, to me, that's true leverage. When I see a lot of the super wealthy people that I work with, guys that can invest $1 million or more into a joint venture, they're all about leverage. And so one of the beauties about real estate is you can leverage the bank for financing. Like that's number one, most basic. But as an entrepreneur, especially contractors, you're leveraging people in your business every day. Leverage, right? People are doing all the work. Well, the wealthiest people I know do that with real estate as well. They leverage operating partners, and they're leveraging people and money at the same time. So that's what I would say is take a good look at how active do you want to be? What's your goal? Because a lot of people really, they want to be active, and that's great. They can do that. The other people they focus on making the money and then putting it to work with the right partners.
There's 2 big things I've taken away here from this conversation. One is it's as you just mentioned, it's the long-term goals. What are you looking to do? And it's these actions now that are fueling that. So now it's the 10x 7y for you, and prior to that, it was the different goal of buying a property a year. But also there's a grind here. This is not an easy quick fix get rich scheme. Like you work hard. You do a lot of research. You're very active. And I think that's what people need to hear is that going into real estate is not just an easy, quick, get rich scheme. There is a lot of work involved. You got to treat it like a business.
Yeah. And it's long term. I'm not really in a flipping game either. I have flipped properties, but that's not my business because it's just too risky. And the beauty of real estate is it's in the wait, honestly. The beauty is in the wait. You get the tax advantages along the way, and you can recycle your cash and redeploy equity. There's so many cool strategies that allow you to maximize the velocity of money, the tax savings, and it really, once you get a few of them going, it just becomes this cycle, this positive cycle, but it doesn't happen fast. It happens over many years.
One must have patience if they get into this game. Pete, this was awesome. I appreciate you kind of bringing us into your world a little bit. If people want to follow you, kind of learn what you're doing, learn more about Asset Streams, the Deal Room, I'll be sure to link the Deal Room link in the podcast summary so that folks can check that out. But where else can they find you?
Yeah, so our website is assetstreamproperties.com, and on there, you can sign up to be on our newsletter. We put out a lot of cool info there. I've written two books that you can download. One of them was an Amazon bestseller. I've co-authored them.
Cool.
So there's some cool stuff there. Or if you're on social media, you can look me up on any of those platforms.
That's awesome. I feel like you have piqued my interest. I don't know if I'll ever have the guts to go down this road like you have, but I think if anything, the more that we can kind of surround ourselves with just understanding how things work around us is number one. Gives us some good perspective on the paths that people choose. So thank you for sharing yours.
You bet. I
All right.
appreciate that. One
All
quick
right.
note on that, not having
Yeah.
the guts, I'd like to share because I will honestly say throughout my 20 years of buying property, almost every single one that I've bought right before, I have this tremendous fear that the market is going to crash the next day. Because my first house that I bought was in the last peak and it short, like the market dropped the next month.
Yeah.
So there is a lot of fear in people's heads. And, if this is what you want, you either need to get over that and just do it, or you need to partner with somebody that can.
I'm so glad you shared that because that's honestly that's the human side in all of this, right? Like the emotions of any risk are very valid and very real. And so to pretend like you feel nothing wouldn't be authentic. So I
Yeah,
appreciate that share.
very good. Okay,
Well,
Molly, thank you so much.
yeah, I would say until next time because I'd love to have you back on in the future because there's always more to chat about. So until next time, Pete, thanks so much.
You bet.